HMRC is bringing in massive tax changes. And so if you are a business owner or a landlord, you need to act now. Making tax digital for income tax is coming. And if you don't prepare, you could face massive penalties and tax headaches. Stay with me. I'll be explaining everything you need to know that will help you prepare before the deadline. I'll be answering questions such as, can I leave making tax digital after joining if my income falls below the threshold? Will there be any late filing penalties? When do I need to pay my tax by? What will be the deadlines for the quarterly filings? Making tax digital is a new system for recording and reporting income and expenses to HMRC if you are self-employed and or if you are a landlord with a rental income. This system is starting from 6th of April 2026 for individuals who are self-employed and for landlords with rental income that meet the income threshold criteria. If this is your first time here, my name is Amma, a chartered accountant and a tax professional from AB & Co Accounting and Tax Services. So who will be affected by making tax digital? If you are self-employed with a total income of over 50,000 reported on your 2024-2025 tax return, you need to join making tax digital from the 6th of April 2026. This applies to a landlord who will also report a total rental income of over 50,000 on their 2024-2025 tax return. Limited companies are exempt at the moment. If you are in partnership, you are also exempt. If you have limited liability partnership, you are also exempt from making tax digital at the moment. For members of a partnership and a limited liability partnership, as long as you don't have any other income from self-employment or from rental property with income threshold meeting the criteria for making tax digital, you will also be exempt from making tax digital. So how will making tax digital be different from the current self-assessment regime? Currently, you can choose to file using a paper return and you file just one return per tax year. Alternatively, you can file one return per tax year online. With making tax digital, you are mandated to file quarterly submissions to HMRC. And again, you are required to file a final return to HMRC, making it 5 returns per tax year. So that is one of the differences between making tax digital and the current system. Again, with making tax digital, you need to use HMRC's approved software to file to HMRC. But with the current system, you can use the free version of HMRC's online system, or you can file by posting a paper return to HMRC, and all these are free. With making tax digital, you are required to use HMRC's approved software to do all your submissions. Currently, most of them are not free of charge, which may mean you may have to pay for your software for filing both the quarterly and the final submissions to HMRC. So what are the dates you need to do the quarterly filings? Here are the dates. For quarter 1, the period covered is 6th of April to 5th of July. And it needs to be filed by 7th of August. For quarter 2, the period covered are 6th of April to 5th of October, and it needs to be filed by 7th of November. For quarter 3, the period covered is from 6th of April to 5th of January, and it needs to be filed by 7th of February. For quarter 4, the period covered is 6th of April to 5th of April, and it needs to be filed by 7th of May. So you can see it is a cumulative system. Each quarter contains the previous quarter. And so if you made an error in the previous quarter, it will be captured in the next quarter. If you have found value so far, please hit the like button and don't forget to subscribe to our channel for more videos such as this. So now let's try to answer the question, which is, if I join Making Tax Digital and my income falls well below the qualifying income threshold, can I come out of Making Tax Digital? Yes, you can, as long as your income is below 30,000 for 3 consecutive tax years after joining Making Tax Digital. You can apply to be exempted from Making Tax Digital. As an example, if you were mandated into Making Tax Digital from 6th of April 2026 because your total income for 2024-2025 tax year was over 50,000. But after joining in 2026-2027, in 2027-2028, and in 2028-2029 tax years, your total income were well below 30,000. You can apply to be exempted from Making Tax Digital from 2029-2030 tax year. That is another question answered. When do you need to pay the tax due now that you are filing quarterly return? The due date for paying your tax will not change. It will remain as it is currently. You may be asking yourself, will there be any penalty implications if you file any of the quarterly returns and the final returns late? Yes, the government has confirmed that they are going to use point-based system for penalties, just as the current VAT system works. So you will accumulate points anytime you file any of the returns late. And once you reach the threshold, there will be a penalty of £200. After that date, anytime you file any of the returns late, you attract £200 straight. So this is how the penalty system will work for Making Tax Digital. Now let's consider how you will need to prepare before this date. The first thing you need to consider is to decide whether you would like to do this yourself or to hire an accountant to handle this for you, to give you time to concentrate on your business. We are here to help you. You can always contact us using the details in the description. Alternatively, you can hire an accountant to handle this for you. If you decide to do it yourself, you need to research HMRC approved software you would like to use and learn how to use it. You would also need to keep accurate records so that every information you send to HMRC will be accurate. You will also need to know the quarterly filing deadlines and the final filing deadline to avoid any penalties. I hope you have found this video useful. If you have, please subscribe to our channel and don't forget to hit on the like button to send us a signal that you have found value in this video. Thank you for watching.